We welcome back our Channel 404 viewers. Let's take a look at your market news now. Asian markets were up today as a perception of a softer tone on U.S. import tariffs appeared to take hold. It's been a yo-yo week on Asian equities as developments in Washington unfolded since last week. For now, the feeling about a possible trade war has lessened, but remains very possible. Japan recorded its 8th consecutive quarter of growth, surpassing expectations. Fourth quarter GDP came in at 1.6% quarter on quarter. The expectation was 1.0%. And as the US dollar firmed against the yen, the Nikkei share average rose 0.5%. Hong Kong had a good day after falling 1% yesterday. The Hang Seng Index closed up 1.5%. In China, trade numbers for February exceeded expectations. Exports were up a whopping 44.5%, with imports up a modest 6.3%. The Shanghai Composite Index rose 0.5%. Volatility was the name of the game on Wall Street yesterday, with 2 out of the 3 major indexes closing down as a result. Investors are struggling to properly read U.S. trade policy, and Mr. Donald Trump has added to the uncertainty by continuing to promise hefty tariffs while indicating yesterday that Mexico and Canada could be exempt. The Dow Jones Industrial Average fell 0.3%. The S&P 500 lost 0.05%, while the Nasdaq Composite Index added 0.3%. For more on the markets, we cross to Nompumelelo Siziba at the Johannesburg Stock Exchange. Nompumelelo, good afternoon. Over to you.
Thanks very much, Nzinga. Well, we see the local currency has lost some ground relative to the US dollar, and this is on the back of the US dollar generally firming against other currencies, and of course it's had that same impact on other emerging market currencies. Meanwhile, the all-share index has been in positive territory with key support coming from the industrials counters, although mining has not done very well today, and financial counters also a little bit on the low. In company news, we see MTN's looking far better for the year 2017. In 2016, it reported a loss, and this time it's reported a decent profit for 2017. We'll be looking at that just now. And Standard Bank also posting quite healthy results. Let's take a look at the indicators. I'm joined by Chris Gilmore. He's an independent analyst. Thanks for joining us, Chris.
Only a pleasure, Napu.
Good stuff. Nervousness remains in global markets around the possibility of a trade war, although Mr. Trump sort of toning down his language yesterday. There may be exemptions for some countries. What are the key drivers of markets today?
Number of things. If I go back to about, I think, August, September last year at the Alan Gray conference here in Santon, there was a fellow American chappie called Todd Buchholz, and he was very, very good. And he distilled everything down into 3 factors. He said, look, if you have interest rates, inflation staying relatively benign, moving up gradually, and not having trade wars, then global equity markets should be fine, and they should remain relatively robust. Well, what have we had in the past few weeks? We've had indications that inflation is rising, and that's probably quite a good thing. Interest rates, we're probably going to get 4 interest rate rises in the US this year, and some people are talking even more than that. So maybe there's a bit of nervousness there, and we saw a few weeks ago the market reacted when they saw what was happening to bond yields in the US. And now we've got this other factor, this real bête noire, the possibility of trade wars. Trump has to be very, very careful. Got to make a few comments here. Steel and aluminium comprise about 2% of total imports into the US. So it's not going to have a huge impact. But already we're starting to see indications of retaliation from other parts of the world, notably the EU. Other thing is, you cannot unilaterally just go around doing this type of thing. The World Trade Organization really doesn't like this kind of stuff. And they will prevent you from doing it, because this could get bogged down in places like Brussels for the next year to 18 months. So, you know, a lot of this is a bit of puffery. And I think a lot of it is due to Trump saying, well, this is America first, blah, 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 and not really understanding or even worse, caring about the economic consequences of what he does. And that's filtering through now into markets getting, and I think to answer your point, a lot of very, very jittery, a bit nervous, because we say we've had the rise in inflation, we've had the rising interest rates, and now we've got this. So if Buchholz is right, then maybe we could be seeing a degree of uncertainty creeping in sustainably into global equity markets from now on.
And then when we look at Japan, we see that the GDP number came out much better than expected. They've had 8 consecutive quarters of growth. But does this mean you expect the BOJ, the Bank of Japan, to begin to withdraw that stimulus they've been giving the economy?
Yeah, look, eventually they probably will. And Mr. Kuroda, the finance minister, that's probably why they've extended his mandate, for a little while yet. Japan's a funny one. This is a sclerotic society. The average age of a construction worker there is 67. These guys just don't know when to stop. And but you've got a declining birth rate. You're going to have fewer people in 10, 20, 30 years' time than you have today, no matter actually what happens. So it's a difficult economy to try and analyze properly. But I think even there you are going to see the stimulus removed eventually, as you are in Europe. We are eventually, around the world, going to get to a position where you have more normalized interest rates coming through. Yes.
Let's take a look at a couple of counters if we have time. Standard Bank first. They came out with their annual results, not looking too bad. I think if we can look on the screen, we see that, yes, the headline earnings per share were up 14%. The dividend is up 17% for the year. Return on equity up 17.1%. In the previous year, it was up 15.3%. Cost to income ratio has also come down. These ratios looking quite good. Looking
very good indeed. This is by far the best result of any of the banks. I mean, I went to Nedbank, I went to First Rand. I didn't manage to get to this result, but this is a great result. And, way above what any other bank has come out with. And we see it in the satisfaction surveys as well. I mean, they're coming about halfway through there. So, I think it's been a tough background for all of the banks working in South Africa. And I think if we use Nedbank as a good example, they basically said last Friday that all other things being equal, they could see around about 12% growth in the current year. Standard probably looking for a little bit higher than that. And against a background of growth in the economy at around about 2%, which is really pretty pathetic, that's really not bad at all. And I think it explains why a lot of investors, both foreign and local, have been getting into banks, because they really were, until very, very recently, extremely cheap. Now they're far less cheap than they were, but I think they still probably offer value if the kind of growth that I'm referring to now can be achieved in the course of the next 6 months.
Let's see. And then let's take a look at MTN. They had an annus horribilis in 2016, what with that fine from Nigeria. Their metrics also not looking too bad. Their revenue for 2017, not so great. It came out at 132 billion rand relative to the 147 billion rand in the previous year. But their operating profit up quite substantially relative to 2016. Headline earnings per share at 182, and that compares to a dismal headline loss of 77 cents in the previous year. The dividend for this year is at 450 cents, looking good.
Yeah, this is a fantastic turnaround situation. As you rightly say, revenue down, but profits up substantially. And I was listening to Rob Shuter, the MD, the CEO, a little bit earlier. And, he pointed out a lot of this good news is coming out of Nigeria. And that's where they had the problems to which you referred a couple of years ago, 2-3 years ago now. So that is largely behind them now. So they got the benefit from a relatively low base of comparison. But nevertheless, I think they are doing well in Nigeria. If you look at the composition of where the revenue comes from in Nigeria, predominantly still 75% of it is in voice. So I think their ability to go in and give more and more data, which is more profitable in Nigeria and in other jurisdictions, I think is there. So I think Shuter has done a fantastic job in a relatively short space of time. And all power to his elbow. It's a good result.
All power to him for now. Thank you very much, Chris. Chris Gilmore, independent analyst with his perspective on the markets. After a short break, and Zinga with more business news for you.